All right, nice reaction, and boom, the profit hit and price kept going to the down. So this is a massive trade. So even if we push this to yesterday's low, that's about 1 to 6 risk to reward ratio on this using the kill zone. Recently I asked a simple question on my YouTube community: what video should I make next? And this is what I got. And this is why I'm making this video on ICT FOREX entries using liquidity concept, ICT KILLZONES, timing, and OTE. So in this video, I'm going to be walking you through step by step on how you can use the ICT KILLZONES for your daily entries. So do well to smash the like button and subscribe to the channel in case you want to get value. All right. So without further ado, let's dive right in. So the first thing you want to do is to go to this indicator session, indicator session, and just type ICT KILLZONES. Right. So once you type ICT KILLZONE, bunch of indicators are going to pop up. Now, I personally I'm not using this. I'm not using any of this indicator because I understand the concept very well. But we're going to choose a random box. So let's choose the box. So we're going to pick this particular one and let's see how it looks like. So this is exactly how it looks like, PZ boxes. So we're going to see if this is something we can work with. So you see it starts around 8:30. Now as for me, 8:30 is too much, so I think 8 o'clock, 8 a.m. is okay. But for the purpose of this video, we're going to be using the 8:30 time frame. All right, so without further ado, let's dive right in. So we're going to be using this for an example. So let's say we come on this particular day, right? So what you need to do is first of all know the hour time frame move. So as you can see, price is currently on a downtrend, so we should be looking for more of a selling opportunity. So once we are looking for a selling opportunity, what do we expect? We expect that liquidity will be taken out. So when we talk about liquidity, we are talking about the mitigations of orders by the banks and the big institutions. So you want to play safe, and that's why we are called smart money. So liquidity, want liquidity to be taken, and we have this Asian. So for those of you who don't know this Asian indicator, it's called Asian range by Nico. Shout out to the creator of those indicators, right? So we'll keep it very simple. So we want this Asia high to be taken, and we have this low too. So this range, this is the Asian box. So until there is a break out of this box, we are not taking any trade. Remember, you said I should make video on this, so that's why I'm doing this right now. So in case you want me to make another video, just let me know in the comment section below the kind of video you want me to make. Is it on supply and demand? Is it on break of structure? Is it on entry? Is it on confirmation? Is it on ICT strategy? Just let me know below. Please don't forget to boop the like button so that this video can get to more people. So with that said, let's come back to the video. So what do we have here? We have this zone as what? We have this as our order block. Now, the reason why we have this as our order block is very simple, and I'm going to explain this to you in a moment. Now, this becomes our order block simply because so I'm going to make that a simple. Now, if you see this push, these are push, we've seen a push up, right? Now there, a push up, and we see a push down, another push up, and a push down that broke structure. Remember, in order for you to mark an order block, there has to first of all be a break of market structure. So you want to see a break of market structure first. Once you have been able to identify break of market structure, which in this case we have here, you need to ask yourself the question, where's the last candle that was responsible for that break of structure? That becomes our order block. Now in this case, what do we have here? We have this zone as our order block. So we have many candles. Okay, we have many candles in between, right? So we have various candles. Now we don't have to pick all of these candles as our order block because we understand the concept very well. So what do? This one is tiny, very tiny, it's too tiny. So this becomes the order block, right? This becomes the order block. But we're going to refine this order block. To refine this order block, we now move it from here into this zone where it is. So that becomes our order block. We project it to the future. Now, what do we do next? We're not taking any trade until price gets to our London kill zone. So we're going to play price forward. So at this moment, price have not gone to a London kill zone, so we're not taking any trade yet. Remember, we're looking for more of sell opportunities because this is a selling market. So price choose to push up and it trades. We're not there yet. So for me personally, I like using the 8 a.m. window, which is this particular time. But we're going to be working with this indicator. So we have we're going to be working with around 8:30. So until price gets there, we are not interested. So we can now scale to a lower time frame. So if you want to enter on the 15-minute time frame, now this is the kill zone that we're talking about, right? So we are already in that particular time. It's already the time. So this is the candle that opened the London session. So that, you know, if you have been following me, I've often heard me say pre-London session open. This is what I mean. Pre-London session open is those sessions and the time before the actual ICT kill zone. Okay, so what we want to do next is want to scale to the lower time frame because we actually look at this from the 15 minutes. So it's better we just go to at least one time frame lower, but 2 time frame lower will be better. 4 hours to 15 minutes, 15 minutes to 1 minute, and so on, right? So we're going to be working with the 5 minutes in this scenario. So what do we have here? We have a tap into what? Into our order block, which is an ICT order block. And what do we have next? We have a break of structure, a valid break of structure. Now that was not just a weak break of structure, but a body break. So we first of all had a weak break of structure and a body break. Now in this case, what do? We simply wait for price to get to where? To our order block. And where's our order block? This becomes our order block. Now before I say that's our order block, this whole zone is our order block, right? But this is too big. We're not going to be working with this zone, so we're going to refine this into a smaller zone, right? So we're going to refine this further into a smaller zone, and if it's too small, the smaller it is, the higher the risk to reward, but the smaller it is, the possibility that you will not be targeting. So we're going to be using this. So can we change the color for the sake of this video? Let's make it yellow. So that's the zone where we are taking our sales from. So in today's video, I'm not going to the 1 minute time frame, just showing you because this is where we are going to be doing. This is ICT, right? Unless you want me to make videos on supply and demand, then I can go to the 1 minute, showing you how to enter on the 1 minute, what to look for, and so on, right? So in this case, we are waiting for price to tag us in. And where would our target be? Our target will have to be below where we have liquidity, because we have liquidity here, and we have liquidity here. Asian lows and Asian highs are liquidity. So what do we have in ICT? Whenever the Asian high is taken and price is bearish, then we are ready for sale. And where should you target? You have to target the liquidity below, and we have the Asian low here, so that becomes liquidity where we are targeting, right? So we want to push it to at least a reasonable place. So that's 1 to 3, almost 1 to 4 risk to reward. But I can scale this and move it. I can go to 1 minute time frame, and this will give me like 1 to 10 risk to reward ratio. You might say it's insane, but in case you want to learn that, that will be another video. But that video will not be based on ICT. It's going to be based on supply and demand, because there is a concept that we're also going to combine with the wonderful concept by the ICT, the inner circle trader. So what we do here is, what we can as well do is we can easily refine this as well into that particular zone. So I'm actually combining my a little knowledge from supply and demand zone into this, right? But you should not get yourself confused. Normally, based on ICT, order block we supposed to be this particular one that I showed you earlier on, supposed to be this one, but there is a room for refinement. We can easily refine. So inside this, we have candles 1, 2, 3, 4, 5 candles. So we can easily refine our order block into major candles like this one, right? So that becomes, so you want to fathom that eye as well. So in this case, we're going to be using this one. So I'm going to uh, it seems our indicator didn't give us the kill zone. But don't worry, because that, like I said, I really don't use the indicator. But for some of us who are beginners, that's why I choose to show you this indicator. So you might go there and look for other indicators, know your time. So I think this indicator, they are not using my time, they are using I really don't know the time they are using, but I think they are using the instant time, I think so, right? And I use the GMT plus 1 time. Okay, so we have what's it called now? So let's play price and see what's, so just to make this thing cleaner, let's move price into the zone and let's play price and see what we have. So we have been tapped in, and now that we have been tapped in, we have liquidity here. So you want to understand the concept of liquidity whenever you are taking trades. So ask yourself the question, is there liquidity? If the answer is yes, okay, fine. Now that there is liquidity, I can now target that liquidity, right? So we have liquidity, we have bunch of liquidity actually, bunch of liquidity in these zones actually. So those are the areas we are targeting. So it is cool, right? So what we are, okay, we see now that our indicator is up. So they place it, the time was around 8:30. So that's the kill zone. So the kill zones you can actually use, don't enter any trade until it is 8 a.m. in the morning GMT plus 1 time, and don't enter trade once it's after 10:30 GMT plus 1 time, 10:30 a.m. all right. And then I'm talking about London, that's London. Then New York is around 2 p.m. all right. So let's work with what we have here. So we see that price tagged us in exactly at the ICT kill zone time, right? So price gave us our entry criteria during the London Open, and you know, during the kill zone, price tapped us in, and we are interested in that zone. So what do we do next? What we do next is very, very simple. All we have to do is play price to see if we're going to be stopped out or not. So as you can see, price had broken another structure to the downside, which makes it very, very massive for us. So you can possibly, in managing this trade, you can just move your stop loss to break even, or you just, take partials. Don't be greedy, but I'm expecting that price comes to this zone. Right now, if you also notice that the entry was based on the OTE, the optimum trade entry. For those of you who don't know what OTE is, it is an ICT inner circle trader concept that uses the fib, to be precise, use the fib. What you do with the fib is simple. If you are selling, you just put the fib from the top of the price to the retracement point. And what do you have? You enter your trade based on the 79 retracement level, and that becomes our OT. So the OT usually is between 61 to 79 of the fib. So basically that's the OT level. So when you want to use the OT model, all you have to do, just wait for this price gets to 61 to 79. But during your back test, you need to get a particular zone. Maybe you want to say, okay, until price gets to 78 to 79, that's when I'm going to execute trade. So it will actually help you big time. All right, so let's play price and see what price does. All right, we see a little retracement, another break of structure to the downside, which is a confirmation, which is also a confirmation that price is still willing to go to the downside. And what we have full TP hit. Now understand this, full take profit was even hit as at exactly the end of the kill zone. So you see why. So instead of you to waste all your time before, usually if you are taking trade around 7 a.m. GMT plus 1 time, you're actually wasting your time. because unless you are not trading ICT, but if you are trading ICT, you are usually wasting your time. So you just simply wait for price. So for time, that's what is called timing. Okay, the ICT timing, the ICT key zone, and whatever you want to call it, right? But basically, that's the concept. You just have to wait for specific time for you to enter trades, right? So that's for the London session. Also for the New York session, there's a way you can also approach it. On the New York session, what do you have? We have the stop hunt hour. Now from 11 a.m. is what's called, I know most of you don't know this, is what's called a gap time. And what is the meaning of this gap time? So basically, this gap time is the time where those who actually trade the smart money in the institutions and the rest, this is where the shift, what's it called? This is where the change shift, right? So usually volume reduces and there's a lot of manipulation. So once they come in by 12 p.m., manipulations and volume comes into the market. So you want to also skip those areas. 12 p.m. and 1 p.m. don't trade, wait till 2 p.m. and that's another kill zone, right? So if we wait patiently for that particular zone, so we have a break of market structure here, and what do we have again here? We have a break of structure. So where's our order block? This becomes our order block, right? So we have our order block here. Remember, we are still bearish, so we have our order block there, and it can also be refined into a smaller level just to keep it safe. So want to play price to, let's see if what we can do. That's right, price have not tapped that in. Okay, so we are now in the New York key zone. So if you are trading in New York, you want to get into your chart a few minutes before 2 p.m. all right? So this indicator gave us around 1:30 p.m. GMT plus one time, which is also cool, right? It's getting you ready for the trade, right? But personally, I use 2 p.m. so you might want to, do some back test. And we have, what do we have? We have liquidity here, internal liquidity right there. That's what we have there. We have another liquidity being built up here for our zone, right? So basically, what are we looking at? We're looking for possible entry at this zone, so we can actually enter our trade from here, because we are now also have we are also in the quick what's it called now, the New York Q zone. So where are we targeting? We have to target where the London low. So this is the London low and this is yesterday's low. So you might want to target yesterday's low. So it's a possibility, something you can as well do. So I will not go details on these yesterday's and previous days stuff, because that's not what this video is all about. This video is all about the ICT concept of liquidity, timing, OTE, key zones, and so on, right? So I hope you are getting value. Please, if you are getting value, like the video and subscribe to the channel for more value. All right, so we have a zone there. So let's see what price does. Okay, so we have a kind of break, but this is not a nice break, but that could just be a liquidity grab. And we have this zone. So this is a perfect zone for another entry. We have a perfect zone for another entry here. So where's the other block? We have the other block. This full range is the other block, but it can be refined, so that becomes our other block, and we can possibly enter a trade from this zone. And while we targeting, we're going to target the same low. So this time it's going to be the same low, that's yesterday's low. Or London, just to be safe, make sure you just target the London low first, or you take partials when price get there. But also have this in mind, that we have some liquidity above here, right? So but this is worth trading, because if you see this zone was created during the ICT Q zone, and there was an internal break of structure right here, a substructure break, right? You want to make no more substructure, you need to watch my supply and demand zones videos, and price comes here. So this is what we're expecting. So let's play price forward and see what happens. All right, so nice reaction there. Oh, perfect. So there's a perfect entry. So we'll have to delete this order, because we already have our profit locked. So we have a profit already locked here, 1 to 4. Now if I go to a lower time frame, I can do better. This 1 to 4 can be refined to say 1 to 8, right? And it's going to give us the same stuff that we're looking for. And more on that is on my video on supply and demand. So check the channel. You really don't want to miss out. Make sure you subscribe to the channel for more. Right, so we have a break of structure here. We actually have a break of structure, and London low have been taken out. Remember, London low have been taken out. Seeing that this London low have been taken out, what do we expect? We expect price to reverse actually, but seeing that we're in a downtrend, we can take partials here and see if price gets to yesterday's low, because all these lows are liquidity as well. So let's just play price and see what happens, then can call it a day. Right, so a little bit of retracement into the order block that caused that break of structure, which is this zone right here. Just to explain to you, so that could potentially be another entry. I remember by this time you must have broken even because you're already in deep profits. So let's see. All right, nice reaction, and boom, take profit hit, and price kept going to the downside. So there's a massive trade. So even if we push this to yesterday's low, that's about 1 to 6 risk to reward ratio on this using the kill zones and the timing. You see that you barely spend few, like just 2 hours or 3 hours, and you make your money and get out of the market instead of you spending the whole day, right? So this gave around 1 to 6 and 1 to 4. So if I project this to the downside, that's about 1 to 5 risk to reward. So this is what the ICT kill zones can do for you, and understanding the liquidity concept, this can actually skyrocket your trading. So make sure you sit tight as you practice this yourself. In case you want to learn exactly how to be profitable using the supply and demand, you want to increase your risk to reward ratio, do well to watch the videos on the end screen. I think YouTube recommended one, why I placed one for there for you to enjoy. God bless you. Peace.